Ethereum, everything you need to know. Ethereum is not just a cryptocurrency, it's an entire platform, ecosystem, and vision for the future of the Internet. Born in 2015, Ethereum has grown into the most widely used and most actively developed blockchain in the world. If Bitcoin is digital gold, Ethereum is digital infrastructure, programmable money for programmable applications. From decentralized finance to NFTs, DAOs, and now artificial intelligence integration, Ethereum is at the center of nearly every major crypto innovation. While Bitcoin introduced the world to blockchain as a secure way to store value and transfer it without intermediaries, Ethereum expanded that idea dramatically. It proposed that if you can decentralize money, you can also decentralize software. What if applications could run on a blockchain, not just currency? What if you could create contracts that execute themselves, without relying on courts, lawyers, or corporations? That was the core idea behind Ethereum, a global computer that no one controls and everyone can access. Before we begin, an important message: crypto assets are high risk and not regulated in the UK. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research. Ethereum was proposed in 2013 by Vitalik Buterin, a Russian-Canadian programmer and Bitcoin enthusiast. At just 19 years old, he envisioned a platform where developers could build decentralized applications, or DApps, using a blockchain that supported smart contracts. These smart contracts are self-executing bits of code that automatically enforce the rules set within them. No human intervention is needed once they're deployed. This single concept unlocked an entirely new world of possibilities. After a successful crowd sale in 2014 that raised over $18 million, the Ethereum network officially launched in July 2015. From day one, it attracted builders, startups, and curious minds from all over the world. Ethereum quickly became the home of innovation, offering a playground for developers to experiment with financial protocols, games, marketplaces, and more, all without asking permission from tech giants or regulators. At the heart of Ethereum's functionality lies its native currency, Ether, or ETH. Just like Bitcoin, Ether can be sent and received across the network. But unlike Bitcoin, Ether is also used to pay for computation. Every operation on Ethereum, whether you're transferring tokens, deploying a smart contract, or minting an NFT, requires gas, which is paid in ETH. This creates a natural demand for the currency and fuels the ecosystem's activity. Ethereum's flexibility comes from its architecture. The Ethereum Virtual Machine, EVM, is a decentralized computer that runs on the nodes of the network. It allows developers to write smart contracts in a programming language called Solidity. Once deployed, these contracts live forever on the blockchain and can interact with other contracts and users. It's a powerful system, and it's what makes Ethereum so dynamic and versatile. As Ethereum grew, so did its community. Developers flocked to the platform to build decentralized exchanges like Uniswap, lending protocols like Aave, and stablecoin systems like MakerDAO. These applications don't rely on banks or brokers. They run entirely on code and are accessible to anyone with an internet connection. This gave rise to what we now call DeFi, decentralized finance, a movement that exploded in popularity during 2020 and 2021. DeFi showed the world that Ethereum could host complex financial systems without middlemen. Users could lend, borrow, trade, and earn yield directly from their wallets. Billions of dollars poured into DeFi protocols, creating a parallel financial ecosystem governed by smart contracts instead of corporate boards. Ethereum wasn't just a blockchain anymore, it was a financial operating system. But Ethereum wasn't just for finance. In 2021, the world was introduced to NFTs, non-fungible tokens, and once again, Ethereum was at the center. Artists, musicians, game developers, and brands began using Ethereum to create unique digital assets that could be bought, sold, and owned on the blockchain. While the NFT market experienced wild ups and downs, it proved that Ethereum could power new forms of digital ownership and creativity. This explosion of activity brought Ethereum into the mainstream, but it also exposed serious limitations, particularly with scalability. The more people used the network, the more congested it became. Gas fees soared, and users were paying hundreds of dollars just to send a transaction or mint an NFT. It was clear that while Ethereum's vision was groundbreaking, its infrastructure needed to evolve. Ethereum's developers were well aware of this problem. From the beginning, the roadmap included major upgrades to make the network faster, cheaper, and more sustainable. The most significant of these was the transition from proof of work to proof of stake, a complete overhaul of the consensus mechanism that secures the network and validates transactions. This upgrade, known as the merge, finally happened in September 2022. It was one of the most ambitious engineering feats in crypto history. With the merge, Ethereum replaced energy-intensive mining with a system where validators are chosen to propose and confirm blocks based on how much ETH they've staked. This reduced Ethereum's energy usage by over 99% and paved the way for future scalability improvements. The move to proof of stake not only made Ethereum greener, but it also changed the network's economics. Validators now earn ETH rewards by securing the network, and users can stake their ETH to participate and earn yield. This created a new incentive structure and brought Ethereum closer to being a sustainable, self-governing financial system. But scalability is still a work in progress. While proof of stake was a huge step forward, Ethereum's base layer still processes only about 15 to 30 transactions per second. To solve this, developers are building what's known as Layer 2 solutions, secondary networks that operate on top of Ethereum and settle back to it. These include rollups like Arbitrum, Optimism, and ZK Sync, which bundle thousands of transactions into one. These Layer 2s significantly reduce costs and increase speed, making Ethereum accessible for everyday use. Eventually, most users may interact with Ethereum primarily through these rollups, while the base layer acts as a secure settlement layer, much like the foundational layer of the Internet. This is the vision of modular Ethereum, a layered architecture where different parts handle execution, data availability, and consensus separately. Meanwhile, Ethereum's developer community continues to push boundaries. Upcoming upgrades like proto-dank sharding and full-dank sharding aim to improve data availability and further reduce costs on Layer 2s. These innovations are incredibly complex, but they reflect Ethereum's commitment to building a scalable, decentralized internet that works for everyone, not just the wealthy or tech-savvy. One of Ethereum's defining strengths is its vibrant, global developer community. Unlike many blockchains that are driven by a single company or foundation, Ethereum's ecosystem is decentralized and open source. Anyone can contribute to the codebase, propose improvements, or build on the platform. This permissionless innovation has led to a rapid pace of development, with thousands of developers actively improving and expanding the Ethereum network. Ethereum is governed through a process called Ethereum Improvement Proposals, EIPs. These are documents that outline suggested changes to the network. EIPs can cover anything from minor code tweaks to major upgrades like the merge. They are discussed openly, tested rigorously, and only implemented when there's broad consensus. This transparent and collaborative process helps maintain trust and resilience in the protocol. At the same time, Ethereum's ecosystem is not without its challenges. One ongoing debate is about how much ETH should be issued, that is, how new Ether is introduced into circulation. Unlike Bitcoin, which has a fixed supply cap of 21 million coins, Ethereum has no hard cap. However, with the introduction of EIP 1559 and the shift to proof of stake, Ethereum's supply dynamics have changed dramatically. EIP 1559, introduced in 2021, replaced Ethereum's old auction-style fee model with a base fee mechanism and a burn function. Now, a portion of every transaction fee is permanently removed from circulation, effectively reducing the total ETH supply over time. Combined with staking rewards and lower issuance rates post-merge, this has led to periods where Ethereum becomes deflationary, meaning more ETH is burned than created. This deflationary mechanism has huge implications for Ethereum's value proposition. Some now compare ETH to a yield-bearing, deflationary asset, something like a digital bond crossed with ultrasound money. Investors are increasingly treating ETH not just as a utility token, but as a long-term store of value with cash flow potential. This evolving narrative has helped attract both retail and institutional capital. Ethereum's adaptability has also made it the preferred platform for launching new projects. Whether it's gaming, social media, data storage, or decentralized science, Ethereum remains the go-to choice for developers looking to build secure, interoperable applications. This network effect reinforces itself. The more tools, users, and capital Ethereum attracts, the harder it becomes to displace. But Ethereum is no longer alone. Competing smart contract platforms, like Solana, Avalanche, Sui, Cardano, and Polkadot, offer alternatives that claim to be faster or cheaper. These so-called Layer 1 competitors aim to capture market share by solving Ethereum's pain points. Some use novel consensus mechanisms. Others focus on niche verticals like gaming or AI. While competition is healthy, none have yet matched Ethereum's level of decentralization, security, and adoption. Ethereum's ecosystem is also incredibly diverse. On one end, you have high-frequency traders and hedge funds running complex DeFi strategies. On the other, you have artists and creators using Ethereum to sell digital art and build online communities. DAOs, or decentralized autonomous organizations, have emerged as new models for collective ownership and governance, enabled entirely by smart contracts. DAOs allow people around the world to pool resources, make decisions collectively, and operate transparently, without traditional corporate structures. They're being used to fund startups, manage treasuries, run protocols, and even buy real-world assets. While the DAO space is still young and experimental, it reflects Ethereum's deeper vision, replacing intermediaries with code, and hierarchy with community-driven consensus. As Ethereum evolves, its cultural identity continues to deepen. Unlike Bitcoin, which tends to attract those focused on monetary revolution or digital scarcity, Ethereum appeals to builders, dreamers, and technologists. It's often described as a doer's chain, a place where people go to create, experiment, and push the limits of what's possible with programmable money and open systems. This cultural difference shows up in Ethereum's governance, too. Rather than aiming for immutability at all costs, Ethereum embraces pragmatic upgrades. While Bitcoin moves slowly to preserve its monetary base layer, Ethereum evolves more rapidly to meet user demand and technological opportunity. This flexibility has kept Ethereum at the forefront of blockchain innovation, but it also introduces new risks and responsibilities. Security remains a major concern. With so many smart contracts and dApps running on Ethereum, the attack surface is huge. Bugs in smart contract code have led to high-profile exploits, costing users millions. The infamous DAO hack in 2016, which led to a controversial chain split and the creation of Ethereum Classic, is a constant reminder that even the best intentions must be backed by secure code and thoughtful governance. To mitigate these risks, the Ethereum community has invested heavily in audits, formal verification, and developer education. There's a growing industry around smart contract security, from code review firms to automated tools and bounty programs. While no system is perfect, Ethereum's focus on transparency and open-source collaboration helps the ecosystem recover, learn, and improve after every challenge. Another major theme in Ethereum's evolution is regulation. As the platform becomes more widely adopted, governments around the world are paying closer attention. Regulators are grappling with questions about whether ETH is a security, how DeFi protocols should be governed, and how to protect consumers without stifling innovation. The legal landscape is complex and rapidly changing, and Ethereum sits right in the middle of it. In some jurisdictions, Ethereum is viewed favorably. Its transparency, decentralization, and real-world utility have earned it a more favorable treatment than many other crypto projects. For example, the U.S. Commodity Futures Trading Commission, CFTC, has referred to ETH as a commodity in the past. However, regulatory ambiguity remains, particularly in the US, where different agencies have overlapping mandates and conflicting opinions. Ethereum's shift to proof of stake also raised new regulatory questions. Because validators earn rewards by staking ETH, some governments wonder whether this constitutes investment behavior subject to securities laws. Meanwhile, concerns about centralization, especially around large staking providers like Lido and Coinbase, have sparked debates about whether Ethereum's governance is becoming too reliant on a few dominant actors. Despite these concerns, Ethereum's resilience continues to shine through. The protocol has weathered bear markets, forks, exploits, and media cycles. Each time, it adapts, evolves, and expands. Its ability to integrate feedback from developers, researchers, and users has kept it at the leading edge of blockchain technology. In many ways, Ethereum is not a finished product, it's a living organism, constantly refining itself. Another significant area where Ethereum is breaking new ground is identity. Projects like ENS, Ethereum Name Service, are creating human-readable addresses that replace long strings of random characters. With ENS, you can send ETH to yourname.eth instead of a wallet address, simplifying crypto for everyday users. Beyond payments, ENS domains can be used as profiles, login credentials, and even digital passports for Web3 applications. Web3, a term often used to describe the next generation of the Internet, is being built on Ethereum. In Web3, users own their data, control their digital identity, and interact with decentralized apps through wallets rather than usernames and passwords. Instead of relying on tech monopolies to store and monetize personal data, users connect directly to services using cryptographic keys. Ethereum is the backbone of this movement. One of the most exciting frontiers in Ethereum's future is artificial intelligence. Developers are beginning to explore how Ethereum-based systems can interact with AI agents to execute smart contracts, optimize DeFi strategies, or manage autonomous protocols. Combined with oracles like Chainlink, these systems could bridge on-chain and off-chain intelligence, unlocking entirely new categories of applications. Ethereum is also making inroads into real-world assets. Tokenization of property, bonds, art, and other off-chain assets is becoming more popular. By representing physical or legal ownership on-chain, Ethereum enables instant settlement, fractional ownership, and global transferability. This could revolutionize markets traditionally plagued by inefficiencies, delays, and opacity. At the same time, Ethereum's role as a global financial layer continues to grow. Stablecoins like USDC and USDT, which mostly operate on Ethereum, now facilitate billions of dollars in daily transactions. These assets bridge the gap between the crypto and traditional worlds, allowing users to hold and transact in digital dollars while benefiting from Ethereum's programmability and openness. Despite its strengths, Ethereum faces important questions. Will it scale fast enough to accommodate global demand? Can it maintain decentralization as it grows? How will it balance user privacy with regulatory compliance? These challenges are not unique to Ethereum, but they are especially urgent given its leadership position in the industry. The Ethereum roadmap includes multiple phases, with names like the Merge, the Surge, the Scourge, the Verge, the Purge, and the Splurge. Each represents a set of technical goals, from scaling and censorship resistance to simplification and efficiency. While the names are playful, the work behind them is serious. These upgrades aim to make Ethereum more secure, faster, and more decentralized than ever before. Community remains Ethereum's strongest asset. From hackathons like ETH Global to research forums and local meetups, the Ethereum ecosystem is alive with collaboration and curiosity. This shared sense of purpose, building an open, equitable, and programmable financial system, is what draws people in and keeps them engaged. For many, Ethereum isn't just technology, it's a philosophy. Ethereum has also proven to be remarkably inclusive. Anyone can use it. Anyone can build on it. There's no permission required. This open access model has enabled developers in emerging markets to launch businesses, artists to monetize their work, and ordinary people to escape broken financial systems. Ethereum's impact is global, and its accessibility is a core reason for its success. As the industry matures, Ethereum is increasingly bridging into the traditional financial world. Institutional investors are now exploring ETH as a long-term asset. Major banks are testing Ethereum-based infrastructure. And ETFs for Ethereum futures have already launched, with spot ETH ETFs gaining traction in 2025. This integration doesn't compromise Ethereum's decentralization, it expands its relevance. Ethereum's influence can be felt far beyond just crypto. It has inspired new forms of collaboration, funding, governance, and innovation. The open-source, permissionless nature of Ethereum has become a model for how digital systems can operate in a fairer, more transparent way. It's not just a blockchain, it's a movement toward a more decentralized, inclusive future. At the center of this ecosystem remains Ether, or ETH. Beyond its role as gas for the network, ETH has evolved into a multi-purpose asset. It's used as collateral in DeFi, as currency in NFT markets, and as a stake in network governance. As Ethereum continues to expand in scope, ETH becomes increasingly vital, not just as a utility token, but as an economic engine that powers an entire digital economy. One of Ethereum's greatest achievements is how it blends ideology with execution. Its community deeply values decentralization, privacy, and freedom, but it also gets things done. Ethereum's upgrades are ambitious, but they're also carefully researched, peer-reviewed, and tested. This balance between idealism and pragmatism sets Ethereum apart in an industry often torn between hype and delivery. Looking ahead, Ethereum's trajectory is clear: to scale globally without compromising its core values. This includes a robust multi-chain future where Ethereum acts as the settlement layer for a constellation of layer 2s, sidechains, and roll-ups, all interoperating seamlessly. In this future, users may never interact directly with Ethereum's base layer, but they will benefit from its security and credibility. New use cases are also emerging. Decentralized science, regenerative finance, on-chain media, and public goods funding are becoming increasingly viable. Ethereum's flexibility allows it to evolve with each new wave of innovation. It's a general-purpose platform, meaning its ultimate impact is limited only by our imagination. Ethereum's critics often point to its complexity, delayed upgrades, or high fees as weaknesses. But these are symptoms of its ambition and openness. Unlike centralized systems, Ethereum's development is messy, public, and democratic. It's built by a global collective, not dictated by a boardroom. This openness is slower, but it's more resilient, transparent, and accountable. Security is always a work in progress. As Ethereum becomes the infrastructure layer for trillions in assets, it must remain vigilant. Smart contract risks, governance attacks, and social engineering will continue to threaten users. But the Ethereum community is among the most battle-tested in crypto. Each exploit brings hard lessons and faster responses. At its core, Ethereum is about enabling people. It's about giving individuals more control over their money, their identity, their work, and their networks. It allows builders to create systems that are open by default. It empowers users to own their data, engage with value on their terms, and break free from traditional gatekeepers. Ethereum decentralizes power. The Ethereum Foundation, while influential, does not control Ethereum. It supports development, research, and education, but the network is owned by no one and run by everyone. This is the essence of Ethereum. It's not just software, it's a living, evolving organism powered by a decentralized, global community of minds and machines. As of 2025, Ethereum stands stronger than ever. Its transition to proof-of-stake is complete. Its Layer 2 ecosystem is thriving. Its roadmap is ambitious, but achievable. Institutional adoption is rising. Developer interest is growing. And ETH, once seen as just another altcoin, is now viewed by many as a foundational asset for the decentralized internet. If you're new to Ethereum, the best way to understand it is to use it. Download a wallet. Try a D app. Send some ETH. Join a DAO. Mint an NFT. Every interaction helps demystify the system and reveals the incredible potential of decentralized applications. Ethereum can be complex, but it's also accessible. The tools are already here. The future is being built in real time. Ethereum's journey is far from over. It will continue to face challenges, both technical and political. But its vision remains intact, a world where value moves freely, systems are open by design, and trust is embedded in code, not corporations. Whether it's finance, identity, governance, or culture, Ethereum is redefining what's possible, and that's what makes it worth watching, learning, and building with. Subscribe to CryptoPulse for deep dives, tutorials, and objective insights into crypto's biggest trends.